Good news on the U.S. economy. The economy grew a robust 3.5% last quarter. That number out just a few moments ago this morning as consumers opened their wallets, marking two of the strongest back-to-back quarters of growth dating back to 2014. Kevin Hassett's chairman of the White House Council of Economic Advisor. Kevin, thank you for coming on this morning.
Thanks,
Yesterday on the Fox Business Network, you had forecast 3.5%. You were spot on.
Yeah, everybody was making fun of me at senior staff this morning about that. But, you know, at this advanced stage, what can happen is we got all the source data and, you know, we can add it up as well as the next guys. And I would have to say there were not a few surprises really in this number. It was a very, very strong number. And for me, the headline is that we now have 12 months where growth is above 3% on average. And that's something President Trump promised. It was one of his main campaign promises. And don't forget that we were growing about half that rate when he took office. So having a whole year at 3%, I think that's really the headline.
The president's chief economic advisor, Larry Kudlow, has suggested on this program that over 4% growth is sustainable for the U.S. economy. So 3.5% in the latest quarter. Are you going to get to an average of over 4%?
You know, that I wish, but you know, anything north of 3 is something that people said was impossible. And you know, I know that when we say GDP for the listeners, it sounds like, oh, what the heck is GDP? But let's put it this way: the typical family of four with an income of $75,000 got a $2,000 tax break because of the tax cuts. And we just saw in the third quarter data that they're going out and they're buying things for the kids. You know, going back to school, the kids had better supplies because there was a big surge in consumption. And so far this year, since the tax cuts were passed, GDP per household has gone up, or per capita has gone up by more than $1,000. And so I think it's clear that President Trump's policies are making ordinary Americans better off.
All right. Well, Kevin, we have often seen the president reference the stock market as sort of a gauge of the success of his policies. And we're seeing the Dow hit record after record there for a while, and the president liked to acknowledge that. But we have seen a wild week on Wall Street, and here we are in just 6 minutes into trading. The Dow is selling off again today, 236-point drop right now. Is the president concerned about what he's seeing in the stock market?
Well, I think the president understands that markets go up and markets go down, and then in the end, what matters is that we got sustainable long-term growth that drives incomes up and earnings up and profits up. And if we do that, then in the end, the market's going to go up and down and then back up again. And that's really the history of the markets, going all the way back to the 1800s. And so I think that especially around elections, when there's lots of uncertainty, it's pretty common for markets to fluctuate a lot. But in the end, as long as the economic growth is there, and my goodness, you know, we've got the lowest unemployment rate since 1969, as long as the economy is sound, then in the end, the market will recover.
Well, a couple things. We're watching that Dow right now off 230. It's on pace to see the worst October for the Dow Jones Industrial Average dating back to 2008. October, historically, not a very pleasant month for the stock market, but we'll see where that all ends up. Meanwhile, a really interesting statistic from the Dow Jones Market Data Group, that October is among the most volatile months in 118 years for the stock market. That is just giving you an example of the wild swings that investors have been experiencing in this market. I just wonder, here's a couple headlines in the Wall Street Journal. Amazon reports another profit for sales, but sales underwhelm. Here's another one. Google parent Alphabet delivers surging profit but slowing sales growth. This is just some of the concern that U.S. companies, large U.S. corporations, are putting out there in their forward-looking guidance. Does any of that concern you? Because the stock market seems to be concerned about it.
Well, I think that right now, if you look at, again, at the economic data, it's about as strong as I've seen in many, many years. And if the data stay like that, then of course the market's going to have to recover from here. But it's very, very normal as an election approaches and people wonder, you know, what's going to happen to Congress? Are they going to reverse the president's great policies for markets to fluctuate some? But again, in the end, as long as growth is there, people who buy and hold for the long run have made money in equity markets for 200 years, really. And so that's the right strategy now. We wouldn't want to scare people into selling. That's all I can say.
You predicted spot on the GDP growth for the third quarter. So what's it going to be in the fourth, Kevin?
Oh, you know, right now I think that we're looking for something around 3, but it's really, really early in the quarter. Like, I can't do it accurately without any data. You know, the point is, right, the day before we've got all the data, so it's pretty easy.
I got to leave it there, but real quick, does the stock market finish higher for the year?
Oh, yeah, I think it should, yeah. I think it should, given how strong the economic growth is.
All right, we'll watch it. It's been a wild ride. Kevin Hassett, thank you from the White House for us.